The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Well, we ended up seeing more continued strength in soybean oil on Tuesday, with strength in palm oil and other rumors around the world, maybe giving us some influence there. That spilled into soybeans, and a little bit of strength, a little bit of green in the corn market as well, although we were off session highs. Wheat trade took some profit on the day Tuesday, and the cow market had a really nice day. Let's talk about it. Joining us now for market analysis, Jim McCormick with agmarket.net. Jim, welcome back to the show. Hope you're doing well.
Hey, good afternoon, Jesse. Thanks for having me on. Yeah, doing well. To the listeners out there, happy 4th of July week. It's kind of one of those interesting trade weeks this week, Jesse. We trade today. We traded tomorrow, no trade. You get the night off Wednesday, go blow some stuff up and, to celebrate America. Take Thursday off to recoup, do it again Thursday night because there will be no trade Thursday night as well. And then we are back at it on Friday for a full day of trade, but I would guess volume will be low. A lot of traders will extend this into a 4-day weekend, and some might even make it into a 5-day weekend. So, volatility will be high, and maybe that gets us a little bit, so if I'm going to give you kind of a real heads up. If you're a farmer out there and needs to sell some grain or something, get those orders working because you could get a quick move up on thin volume here in the next 24 hours of trading. So you might be able to pick off a few sales that maybe you wouldn't expect due to the lighter volume trade.
You answered what my next question was going to be, Jim. You read my mind. It's still hard for me to wrap my head around that we're open Friday. I know we need to be, but still at the end of the day, it's like, man, that's sandwiched between the 4th and a weekend. It's going to be a pretty quiet but thin trade. But to your point, volatility could be out there. That's for sure. And I think some folks would like to see some upside volatility in the corn market. I know we can't always wish for higher prices here, but corn has just kind of been had a bearish onslaught here as of late, and funds have been pummeling this corn market too, it feels like, and getting short and shorter. Your thoughts on this overall corn trade, if we find some bright spots at all here, Jim?
Well, all right. You want a bright spot? I'll give you probably the one thing that's kind of negative but positive. I mean, you mentioned the funds, Jesse. The funds have just absolutely just jumped into this trade, both feet, all in. I mean, they are, it is estimated they were short, 270,000 contracts. That was a CFTC report as of Friday's close, but that was as of Tuesday last week. And we know they sold hard into the report. Some estimates, they were short almost 300,000 contracts going into the report. And then, of course, we had the bearish reaction to the report on Friday to finding more stocks and acres, and that extended their short position by more than likely. Now, we will get a new number, but that number will not be released probably till Monday because the government's going to be closed on Thursday, I believe. But either way, you're looking at a short position by the funds that is about as big as it's ever been, definitely for this time of year, but it might be the biggest ever. So, the good news is there's anything about the funds being this short, being the fact it's only the first week of July, if you can give them a reason to get out. Could it be a rally in the wheat market? Could be a change in the weather pattern? Could it be any other storyline? We don't want to wish bad weather on anybody, but there is a lot of volatile weather out there. Do we get a ratio storyline that kind of spooks them? If you can give a spark to get them out of that position, you may be able to get somewhat of a relief rally. That's what I would call maybe the positive spin of the market. But it's not all positive, Jesse. The big problem the market's got right now is who owns this corn crop right now. The report that we got out last Friday, the stocks report, showed the farmers are holding an awful lot of grain compared to they were a year ago. I think roughly about 3 billion bushels on farm. By the end of the year, we are 2 billion bushels of corn that essentially is being held by the farmer we're not going to need because of the upcoming crop, and they're going to carry that crop forward. And that becomes a huge problem for the producers right now. There's a lot of grain on price. I was talking to one of my clients in Ohio just earlier today, and he said they're talking to some pretty big operators out there that have as much as 40% of last year's corn and roughly 20% of last year's beans on price. and the clock's ticking. Remember, you're going to start harvesting corn in the Delta within 5-6 weeks. You're going to be harvesting corn in Missouri, they're saying, by Labor Day weekend. So the harvest is coming up quick. On top of it, some elevators are actually getting full already. I had a client in North Dakota tell me yesterday that he called one of the ethanol plants he deals with, and the ethanol plant, Jesse, gave him probably the worst news he could hear. He says, I have all my needs covered till the projected new crop. In essence, that elevator ethanol plant does not need to buy another kernel of corn to meet his anticipated demand. That becomes a huge problem for people who have corn to sell. And I think that will be very negative to the market potentially. Now, even if we get a rally by the funds getting out for whatever reason, it will be met with a lot of technical resistance. But I'm really fearful as we get in the latter part of July into August, where farmers just essentially run out of time and get forced to move grain at the market as they try to make room for the next coming crop. And that could really be negative basis, unfortunately.
That's a very fascinating situation to think about, Jim. I mean, just in general, that end of the month report from USDA, that those on-farm stocks numbers that were there, that you're alluding to that, I was quite surprised by some of those numbers, and just hearing your thoughts on that and what you're hearing from clients too. It just feels like that it kind of adds to the bearish weight of the situation overall. And really feels like it could be a little tough to navigate with your marketing here unless you got a real solid plan, Jim.
Well, that's it. And, and part of the problem, Jesse, I've been doing almost 30 years. And, one of the dynamics I've learned over the years, good, bad, right, wrong. If you're a producer and you have a lot of grain in the bin unpriced, that normally means they haven't sold a lot of new crop grain. Because it's almost against, it's very hard to sell something in the field when you got it in the bin, because it feels like you're kind of working against your motive of holding on to the grain. So I think that's a storyline that's very nerve-wracking to me, to the overall situation of the American producer. He's got, like I said, a lot more corn than what the industry thought, but it also tells me he's got a lot of unpriced corn in the field. And the West is definitely debatable. We know we've lost bushels due to the flooding and the extreme weather events we've seen in the West, but the crop in the East, I got to say, is improving by the day. It rained again here in northern Illinois this afternoon, and one of those $1 million rains. If you look at the weather the next 10 days, not a lot of heat in the forecast. A lot of clients say we could use a little bit of heat, to be quite honest, they're telling me, but not a lot of heat. And then, if you look at the soil moisture profile, we look pretty good across a bulk of the Corn Belt. So even if we got some heat, I think we're going to do well. And the dynamics right now, when you look at the crop ratings, both bean and corn. Now, a lot of people shrug off the crop ratings, but it's the best data we've got. When you try to essentially extrapolate what those crop ratings said, the reality is a lot of guys are telling me trend line yield is still very attainable for both beans and corn. And the reality is we do not have enough demand, in my opinion, to meet the supplies prospects if we hit trend line yield without the market going lower, in essence, to buy more demand.
We're talking with Jim McCormick from agmarket.net here today on Market Talk. Jim, you mentioned demand. I know I'm hearing some rumors out in the trade in terms of China maybe wanting to come in here and buying beans ahead of the presidential election. I know Indonesia is putting tariffs on that might include Chinese palm oil. So maybe that was some of the strength and continued strength in bean oil on the day, Tuesday. But largely, though, when I think of demand, U.S. corn demand's been all right. Soybean demand, though, has been pretty tough. I mean, could anything like some of these rumors about China or maybe another player stepping in here potentially perk up some U.S. soybean demand to help out these, continue to help out these markets? What do you think?
Well, if you look at the old crop real quick, the old crop demand, we only got a few more weeks left of the marketing year. The government looks like they've got a pretty good grasp of where it's at, so we're not looking for a whole lot of adjustment on old crop demand. On this, we'll get a new WASDE report here next week. But the new crop, you're right, in the beans, it's a huge problem. Now, we've sold some beans to unknown destinations. Those unknown destinations sometimes are China. So there's some hope that maybe China came in and bought some beans from us. But the official data that I've seen, there is no official sales to China buying new crop beans. And, part of that is, they've been right. That's to be honest, Jesse. I mean, the fact of the matter is, by them not buying beans, they've saved themselves a lot of money, obviously, as this bean market has dropped. Part of it, I think, is they're kind of seeing the problem I'm seeing. The government's using a demand figure for new crop 125 million higher than it was a year ago. Okay. And to do that, even after they did that, the projected new crop carryout's 450 million bushels. Okay. So if China doesn't come in, or if they keep their cards, close to the vest, and they don't come in and buy, and this market gets the perception that China is not going to buy, what happens is you're going to start having to add bushels to that ending stock. You start pushing that ending stock over 500 million plus, historically, you're going to argue $10 beans, and we got another dollar to go. So, the China may be holding off on where it's at. Now, that it's interesting you made that comment about China and the politics of it. There's no doubt about it. That is a storyline that is really picking up steam here in the last 24 hours for various reasons. We've had a couple different other news outlets call and ask us about it. The reality is it's very tricky. I mean, I've heard the storyline that, hey, China's going to come in and buy a bunch of beans because they're going to try to beat, a potential increase in the tariffs. Mm-hmm. Okay. But on the other hand is, the Chinese buyers, are they going to take the negative argument, just to play the opposite side is, are the Chinese buyers going to buy a bunch of beans from the U.S. where they risk the fact that their government could turn around and say, you're not importing them, we're pushing back? There's a lot of economic risk for those producers to come in and buy it if they risk a trade war aspect. Now, the fact of the matter is, if former President Trump, gets elected in November, he's not sworn in into January. So theoretically, policies, any policies he may want to implement won't happen till January, but the market may not react, the market may anticipate it. The other storyline that came out today that I'm worried about, Jesse, is the Chinese COFCO has come out today as being reported, saying that they're talking about working with the Brazilian port of Santos to triple their export capacity. Mm. And I think that is a legit fear of where we're at with a trade war. There's been a lot more tightening of the grip of the Chinese and the Brazilian government and the policy since the last trade war. China, remember, in the previous trade war, China didn't buy Brazilian corn. They're now buying Brazilian corn. Now you're hearing this infrastructure type of rebuild. We know they've spent billions of dollars in infrastructure. So, is China making a signal already saying, hey, you're going to go to the trade war effect. We're already going to try to essentially mitigate needing the U.S. grain. And remember this, when it did it last time around, the China, it caused a devastating move in the grain market when this trade war started. And, the fact of the matter is, the U.S. taxpayer handed out $24 billion to American farmer to stabilize the farm economy. I'm a little bit leery of another trade war, to be quite honest. We got $31 trillion worth of deficits. Do we have another, is there the money out there to bail out the farmer if it gets out there? I was talking to one of my clients that works for one of the an implement builder, and he said, it's scary right now. John Deere, we know John Deere is laying off people. Other industries aren't, but they're not getting orders. He said this guy they were talking to had not one order for a new planter at this one dealership. He said it just, you're seeing machinery depreciate half of what it was worth just a few months ago. And, those are all writings on the wall that the ag economy is already being stressed with these low prices. If we would get into a trade war and our biggest buyer of ag commodities, not just beans, but cattle, but pork, but anything, if they would push back, it could get really tough. And I think producers got to be prepared for that, that risk. I don't know who's going to become elected president. It's an incredibly, it's going to be a very contentious election. But, you got to be, sometimes you got to believe people what they said they're going to do. He said he was going to get in a trade war with China. He did it. Biden kept those tariffs in place. So let's be honest with that. If it gets exasperated, the reality is, unfortunately, agriculture usually takes the brunt of it if the trade wars do happen.
It's a great thought. No, and with the ag economy too, Smithfield Foods closing an Altoona, Iowa plant announcement here on Tuesday, or Monday, into Tuesday. So to your point, this ag economy, a lot of producers are very concerned. I will say that, Jim, and I think it goes up and down the ag chain. I mean, whether we're talking row crops, wheat, corn, beans, you name it, specialty crops, livestock. I know cattle is still churning higher and pushing higher, and we had a good day there Tuesday, but even the proteins too, just the concern at the grocery store. I just think there's a lot of angst out there, whether it's being said or not being said, but you can sense it among farmers and ranchers in the whole ag industry right now, Jim.
Well, and rightfully so. I mean, we've seen prices go down quite a bit. I mean, the cattle market's had a heck of a run. That's the one bright spot. But that cattle market could turn over pretty quick if the U.S. economy starts to slow down hard. And remember, we do export a lot of pork and beef to the China, especially beef compared to where 5, 6, 7 years ago. Brazil's got a lot of beef production. Brazil would love to sell the Chinese beef. I mean, it's a situation that, you've got to be cognizant of the risk. And, unfortunately, we think there is more risk to the downside. To jump back to the corn market real quick, a lot of the analog years, a lot of the trade has been we're looking at is 2014. The market, and the reason why we look at that, Jesse, is 2012, you had the drought. 2013, you had the transition. 2014, it was a bloodbath. 2 years ago, we rallied up on the war. Last year was a transition. This year, we're setting up for a bearish situation. And in 2014, this market sold off on the crop report. It topped on the May WASDE. This year, we topped a few days after the May WASDE, but we broke into the June acreage report. We broke even more coming out of 4th of July weekend, and we just continued to pressure the market. But the thing you got to understand in the big picture, part of what pressured the market was just an oversupply. We had stocks just around 14, 15%. Well, you take these acreage numbers and these stocks numbers that we're currently projecting right now with these adjustments from last Friday, you're talking a 13, 14, 15% stocks to use. And 2014 through 2019, that 5-year period, what did all those 5 years have in common? Stocks to use were between 12, 13, 14% at the end gain. Every one of those years pushed down near 350. A handful of them went down closer to 325 to 3, because that's what it takes the market to get to essentially ration out demand. And that is I unfortunately believe that is a legitimate risk to the downside if we end up anywhere close to trendline yields with these current acreage numbers.
Jim, this has been a great conversation. We took a different path forward today than I thought we were going to, but this has been awesome. Appreciate your insights. As we wrap it up, what do you want folks to remember right now, heading into a holiday, things like that, watching this overall market picture and more? Right? What do you want folks to kind of take home? What's that take-home message for you today?
Well, I want to put take. I honestly, Jesse, I know this was a very bearish report. This is a kind of a negative conversation. I know that, and a lot of your people are like, "Why did I want to hear this?" Well, the reality is, knowledge is power. It is, even if it's not the knowledge you want to learn. Knowledge is power. Unfortunately, there is a lot of producers out there that have got a lot of grain unpriced. You've got to make a move sooner than later. You can always re-own it on the board. The risk is to the downside. The clock is ticking. We are already in the 4th of July week. We come out of this. Weather maps look out 2 weeks. It's hard to get a weather scare in the latter half of July and August. So now is the time for producers to try to come up with a game plan. The prices aren't great, but there is still risk to mitigate. So, consider that as you try to enjoy the holiday weekend, but be cognizant of maybe trying to come up with a risk management program for the second half of 2024.
Well, Jim, I know if folks have questions, they want to reach out to you guys there at agmarket.net, take a look at your analysis and much more. They can do all that online, can't they, Jim?
That's it. I think the best way to go is agmarket.net. You can sign up for our research. We have a brand new app that we've updated that does help you track your marketing of your grain as well as working out scenarios. So you can sign up for a free trial of that. I'm going to encourage everyone to try to do that, if they got a free moment.
Jim McCormick with agmarket.net. Jim, thanks for being with us here today. Have a happy 4th of July. We'll talk to you again soon.
The same to you. Thank you, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.